Last week, we brought you the first 3 recurring concerns in online forums like Reddit. This week, we're going to talk through the second 3 of those top concerns. And we're going to be covering the complexity and transparency, agent motives and commissions, and the long-term commitment and the suitability of it long-term. That's what we're discussing in this week's episode of the Life Insurance Financial Education Podcast, where we're pulling back the curtain on high cash value life insurance and its role in a comprehensive financial strategy. This week, I'm stepping in as host. My name is Carlo Viqueira with NetWealth Finance.
And this is Jing with Tech Exam Millionaire Club.
So Jing, do you have any updates for this week on your investments?
Last time I mentioned we actually bought so-called slow flip, our first one. And we bought it through the Roth self-directed Roth IRA. And we actually put the tenant buyer there, and hopefully he could be the so-called lifter. He will stay there for 30 years and we just be the bank.
Yeah, that's exciting. I'm curious, you already worked out, I assume, what the rate is and what those terms are for that tenant and how much might be possibly going into principal?
Actually, he paid $4,000 as a down payment because it's a small house. So we bought that around $35,000, sold it close to $100K, and then we just be the bank. He will take care of. He's actually a contractor, so he wants to do some investment himself.
Excellent. That's great. I don't have any major updates on my end. Soon I will be taking off for a trip to move my boat down for the off season, but no major updates investments wise for me. All right, let's start with this first one. If you didn't catch the first episode, please check out part 1 of this 2-part series where we discuss the first 3 common concerns from online forums and Reddit. Today, we're going to talk through the second 3. The first concern that we're going to talk about today is the complexity and the transparency. So Jing, why don't you kick us off? What do you think people complain about in terms of complexity and transparency when it comes to an IUL?
A lot of the users or the consumers, they often feel IUL policies is very difficult to understand. It's very complex. So because it's complexity, and then they feel there's so much going inside of IUL, it creates that barrier. So people, they don't trust this product. But actually, we have to talk one by one, right? The complexity, yes, it's a little complex compared to whole life, which is very straightforward, a lot of guarantees. For the transparency side, actually, I'm sure you agree, transparency is actually better than whole life, right? You will see all the charges, all kinds of different charges at the end of your illustration. What's your opinion on that, Carlo?
Well, I completely agree. And if you compare the transparency of an IUL with whole life, I would call whole life much more of a black box, or like the airplane black box. It is, they don't tell you really anything of what they're doing, and they have good reason for that. Because of all those guarantees, like you mentioned, they can get away with not actually giving all the details because they guarantee a rate and they pay a steady rate no matter what. So whole life is different in that regard because all the carriers that we work with have a long history of paying a surplus dividend in whole life. But in IUL, you can see various types of charges with the cost of insurance, supplemental cost of insurance, even the administrative costs. These are like basically line items in most of the IUL illustrations that I have seen. And the reason for that is because they really have to. There's a lot of reasons why they need to do that. So an IUL is actually very transparent in what it is. Now, I will say the complexity, it is a valid point. I think that IULs can be pretty complex, but if you have some understanding of markets and investments, it's not more complicated than that. I'd say if you think about, let's just say I own lots of ETFs in my own brokerage. A lot of their strategies in an ETF or an exchange traded fund, a lot of these strategies can get very complex. And in many ways, an IUL, the indexing strategies could be even simpler. Like the S&P futures, for example, is a really great indexing strategy that people have available. I think that you can have something like, I believe 70% or maybe it's 65% participation rate right now. So there's an S&P futures index whatever that S&P futures index gets, you get 65% of that plus the guaranteed 1% in that indexing strategy. And that's pretty simple. I know it can sound complex, but if the S&P does 10% in a year, you're going to get 6.5 plus that 1% guarantee. It's for a total of a 7.5%. And that's pretty strong, because if the S&P futures index goes down 30%, you're going to get that 1% still. So it can be complex. There's many things like participation rate, the cap rates, spreads, and a number of different levers that can be pulled on. We have episodes discussing all of those mechanics. When you start thinking about those, they can get a bit complex, but they don't all have those considerations.
Yeah, I would say don't let the complexity scares you. We should take a look what's the best product or the best scenario for you, which carrier, what kind of product within that carrier. It could be a whole life, it could be IUL, it could be both, right? I think all of us, I don't own any whole life, but I plan to. So just don't make it an excuse saying, oh, IUL is bad. There's the myth for IUL, the complexity. I just don't want to know anything about IUL. Go with an open mind.
Yes, absolutely. All right, so I think let's go ahead and move to the second or the fifth complaint, or the fifth concern in our list of 6. So agent motives and commissions. Jing, tell me something about that.
Yes, this is definitely a big topic. A lot of people, they all know life insurance agent, quote by quote, agents, right? We are on commission sales, so our commission is high. But I think there's the myth about the right design versus the wrong design. If it's the wrong design, actually the so-called first year commission FYC can be super high, which is true. The first year commission, when you put just say 10,000 or 20,000 premium into the first year, a big chunk will go to that agent, but that's not the right design, which we advocate. So it's a valid concern, but in the meantime, the consumers or the audience, you should just look for the right agent to work with, design the high cash value IUL or high cash value whole life for you.
Yes, I would add, one of the things that I would say is an indicator of a policy that is probably not properly designed is if you're seeing 0 cash value in year 1. And a lot of that is because you're probably paying an agent commission that is way too high. It tends to be that the way that we design for putting the same amount of money into a policy, the commissions that agents get for the way that we design are about 10% of what you might see the improperly designed policies have, or the worst designed policies. I have some videos on my channel about, worst designs compared with best designs, and you can see drastic differences in that year 1 cash value. That's one of the biggest indicators. If you get an illustration that has year 1 or even year 2, 0 cash value accessible, not just accumulation value, I'm talking about accessible cash value, or your cash surrender value. That is the amount that you have access to borrow against, and you should not have 0 in there as long as you're relatively healthy and you're of an age that it is reasonable to get life insurance for cash value purposes. And it tends to be in people who are as old as into their 60s can have decent cash value policies starting out. So 0 cash value in year 1 is a big red flag. I wouldn't want one of those policies. I was actually provided one of those illustrations when I first was getting into this concept, and I did not move forward with it because it looked terrible to me.
Commission should not be a topic you should avoid. You should look at the illustration and then ask all the fees, including commission. Actually, commission is not paid by the consumer, by you. It's paid by the carrier. It's just part of the sales process. Almost all the insurance sales is done by the individual, either captive or independent life insurance agent.
One other thing I do want to cover when it comes to agent motives I'll say a lot of the agents who are designing what I would consider bad policies, they're not malicious or anything like that. These are just the way they were taught. And so that's why it's very important. And not to say that's all of them. Maybe there are some who design this way and they know how to design better. But I think most of the ones that I'm aware of are just not aware or don't know how to design properly. So I wouldn't really question most of their motives when getting an improperly designed policy. All right, so now we're going to pivot to long-term commitment and suitability. Can you tell me something about that and why that's a concern to people on online forums like Reddit?
Actually, a lot of IUL is sold as a retirement vehicle. A lot of whole life actually sold by 10 pay, 15 pay, 20 pay. So people know at at certain point they can stop funding. For IUL, it always be a really long commitment. You have to keep paying and then you can start withdrawing as your retirement income. I think for all the whole life or either whole life or IUL or even GUL, guarantee universal life, it's a permanent life insurance. There should be enough money inside of your policy to cover all the expenses, cost of insurance. So I think it should not be a big concern. It has to come back to your motivation. The reason why you are looking at insurance to have a protection, to have the mortgage protection, or doing something like what we are talking about, infinite banking concept. So the long-term commitment should always be there. And actually, that's the worst thing could happen for policy, right? At the mid to late stage, if you just don't fund it, the whole policy lapse, that's probably the worst thing which will happen to you. After all the long-term commitment, you paid all the premium into that policy.
Well, I'll say I agree. If you've heavily funded a policy and somehow you let it lapse, that would certainly be a terrible thing. Now, if you really do fund close to and you have a properly designed policy with the proper term blend that we like to do, as much as 10 times the base in term insurance, when you do that and you properly design a policy like that, you could potentially fund it for a few years and let's say 7 years of pretty steady funding, you can efficiently get money into a policy. There's regulations that sort of make it that way, and that's the most efficient way, spreading it over 7 years. If you do want to stop funding an IUL, you can. There is the ability to stop funding. It's not my preference. It tends to be that you can fund an IUL for very long if you want to. But if you decide that you want to stop funding after 7 years, you can stop funding it, and that cost of insurance will be subtracted from your cash value. But if you funded it so heavily, close to that max, and you had a properly designed policy, you could go the rest of your life, and that could continue to grow at a very steady rate, even as it's paying for those costs. What you should do at that point, if you're completely positive that you're not going to fund it anymore, there is no concept like in whole life where it's called a reduced paid up. In whole life, you can do that, and you can actually basically cut off all of your life insurance. You're no longer paying for life insurance because you've paid up all of the life insurance that you're going to have in that policy. You don't have that in an IUL, but you can, after that 7 year point, reduce your life insurance to the minimum quarter of insurance necessary to still be insurance and maintain that for the rest of your life. And it becomes extremely cheap. Say I do this when I'm in my 40s, the cost of insurance will be minimal. The guaranteed 1% in my policy could cover those costs. So that's really something you can do if you want to. Now, I don't necessarily promote that because I do think that funding these policies as high and as long as possible is advantageous. It's a great place to park money, even if you're going to move money elsewhere. But it is an option. And I think that is a great option for people if they just want to get money into a policy and use that as their financing tool for a very long time.
Definitely. There's another argument about this IUL should be the last strategy after you exhaust all the others. Actually, I disagree with that. I think the Roth account, definitely you could do the self-directed, and then you can do either whole life and or you start with one. I think the protection, the tax benefit, as well as the purpose of funding money in, take it out to do real estate, to do business investing. So I disagree that should be the last resort to put your money in. It's actually should be pushed a little forward, but I definitely will argue Roth IRA should be, and it's only 7,000 for this when we record this, so it's not a significant amount.
Yes, I think one of the benefits as compared to really anything else, and I fund Roth, backdoor Roth, and a Roth 401k myself. I think that these are very useful tools that most people should take advantage of. But I don't necessarily think that those are the best tools for everyone. If you do need access or possibly will need access to liquidity, then something like an IUL or whole life can give you that liquidity in the near term if you run into scenarios. Now, a Roth, you can access the initial principal that was put in if you need to in an emergency, but the traditional IRA or 401k or retirement accounts, you can't without a penalty. So it really just depends on the situation. But if you have the possibility of running into financial circumstances where you need to tap funds, I would certainly put an IUL ahead of something like a 401k, at least if you're starting out, because that $50,000 limit in your 401k as your 401k loan, sometimes that won't be enough to cover whatever the circumstances are that you run into. So with an IUL, whatever you've put into it, you could borrow against it or even take out the principal that you, or the premiums you paid in if you need to, absolutely need to, in a given circumstance. So in a lot of ways, it's not as much of a long-term commitment as your traditional retirement accounts.
I totally agree.
So that about wraps us up for the 6 most common concerns, or the 6 major concerns that are brought up in online forums like Reddit. Jing, do you have any call to action for today for our listeners?
It's time for this week's call to action.
Since we covered both part A and part B, I will encourage you to go back and watch both episodes and see if you have any of those concerns. Now, if you have any clarity, and then talk to one of us. We all practice this. We all have our own view about why we're buying it, what kind of policy. That's my call to action for this episode. Hopefully, it clears some of the concerns for you about IUL.
And I'm just going to reiterate what I called out last week. Please go to these online forums, find anything that we might not have covered. What are your concerns? What did we miss? Did we not rebut some of these concerns in an effective way? Drop it in the comments below or email us, whatever it might be. Love to hear from you. And we really appreciate getting your feedback. Next week, we're going to be discussing whole life versus IUL for IBC, or the infinite banking concept. It is a hot topic, so make sure you tune in. My name is Carlo Viqueira with NetWealth Finance. You can find me at netwealthfinance.com or on YouTube at NetWealth Finance. And we work with clients for life insurance across the country.
And my name is Jing. You can scan the QR code and join my school community, SKOOL, called Tax Exempt Millionaire Club. We help entrepreneurs, especially solo entrepreneurs, to start shifting your wealth into the tax exempt bucket and realize your millionaire dream one day. I'm also licensed in multiple states, always here to help you out if you have any questions related to IBC, whole life, IUL, and even the application of utilizing IBC.
Thanks for tuning in.
See you next time. Thanks.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.